So for today's video, we're going to be talking about identifying the perfect setup for accurate trade entries, but more specifically, the perfect setup I look for on a regular basis that is simple to follow even for beginners. I love doing these types of videos because, for one, you don't have to overcomplicate your trading, where you actually can be a profitable trader and make money in these markets by keeping things simple. And that's exactly what we're going to show you today. As tradition goes with all of our videos, I'm going to share with you live trading entry examples, but more importantly, break down the criteria that can help you identify accurate trade entries. Like and subscribe if you enjoyed today's video and gained any value. If you have any questions, feel free to comment down below. You can also reach me more directly via email or Telegram. Access all of my official contact information down below in the video description. While you're down there, don't forget to check out our valuable trading resources, free demo accounts, brokers and prop firms that I personally use, signal services, automation, trading community, all of that and much more can be found down below. But without further ado, let's get started with today's video and talk about the perfect setup. I do want to clarify the perfect setup is going to be subjective because everybody is different. Everyone's going to have a different trading style. And not to mention, there are so many different types of strategies where certain strategies might involve various indicators or a combination of indicators. So depending on the strategy you're following, the rules might be different for that perfect setup. However, if you can do what I want to show you today, which again is pretty simple and straightforward, this will help you use any strategy to your advantage and thereby improve the probabilities in your favor. Because remember, trading is all about probabilities. It is our job to identify multiple confluences that support our bias. And if we can find those confluences or confirmations, whether or not we're going to be going for a buy or sell, that improves the odds or the probabilities in your favor. So the point of interest for today's video were a couple of buys that we had taken between 27.36 and 27.40. Just to clarify, these were a couple of setups we had talked about in our last couple of videos. If you haven't seen that, I'll leave some links to those videos down below in the video description. But let's actually clean all this up to avoid any confusion. So again, our point of interest were for a couple of buys that we had taken here between 27.36 and 27.40. Now, of course, as I say in all of my videos, why did we take this buy? All right, and this is going to lead to not only answering the most important question that you should always be able to answer before you take a trade, but also to lead you up with identifying the perfect setup. So first things first, when we look at things from a higher time frame, we can see that the overall structure is bullish, right? We are in a buyer's market. So unless structure gives us a different story, we want to follow the trend, so we're looking for buys. Now, where do we want to buy? Well, traditionally speaking, we buy at levels of support, we sell at levels of resistance. Now, again, we're still on a higher time frame, but I want you guys to understand what it is I'm looking at, because even as a scalper, we have to be mindful of what's going on in the higher time frames, because the higher time frames dictate the overall picture when we're trading on smaller time frames. So if I'm looking for a buy, I need to buy at a level of support. And since we had taken our first entry at 27.36, what can we see from this higher time frame? Well, based off of our entry area, we have a level of support here. Why? Because price is respecting this zone, and we can also see a wick rejection here and here. But I also want to add another line here. Why am I doing this? Well, for one, support and resistance zones are not a finite line on a chart. In most cases, they are a zone. I marked up this first line because of the fact that price is bouncing off but respecting this level, but I also made the second line to represent how far price went from this wick, and you'll notice how that aligns up perfectly around the area of our point of interest. Now, is this enough to confirm that this is a valid support zone? Yes. But sometimes I like to look back a little bit further to the left, and we can see there's really nothing. We actually have to go back a couple of months where our initial level of support hasn't been tested or tread upon since this area. Now, looking towards the left for any added data is a good practice for validating your zones, because as you could see, based off of the zone that we drew, it served as resistance here, eventually broke through, tested what was resistance, now serving as support, came up, and then finally broke through again to now serve as resistance again. One thing you want to be mindful of with support and resistance can serve both purposes. Well, what support can serve as resistance, what was resistance can serve as support. And this is a perfect example of how that's possible. Eventually, price broke up, came back down, retesting what was resistance, now serving as support until eventually breaking below. So fast forward to where we are now, about 2 months later, price has now revisited this level, broke through, tested as support, came back up, and is now retesting that level yet again as support. Now, don't worry, folks. For those of you who are, relatively new to trading, I know how this can be a little bit confusing at first. Don't worry. After we explain everything, I'm going to sum everything in 3 to 4 simple steps. So at this point, we've already established we're in a bull market, right? Price is going up. Only want to look for buy trades. Where do we want to buy? We want to buy at a level of support, and we have identified our support. So this is when I would be pulling up the one indicator I use, which is the RSI, where I'm either looking for some sort of oversold conditions or a divergence, which we actually have on the higher time frame. So just to give you an example, price is creating higher lows, but in that same region, the RSI is creating lower lows. So just to clarify, folks, a divergence is where you have an opposite form of structure between the indicator and the market. Divergences are extremely effective when used properly. These 3 points of an upwards trend line with the convergence of a support level aligned with a bullish divergence are powerful levels of confluences, or again, confirmations that most likely price is going to go up from this point. This right here is more than enough to support my bias that we are looking for buys because we are expecting price to go up from this point. So now that we have the confluences, we come back to the smaller time frame. And as you can see, as price is fluctuating at this point, we get a bullish engulfing candle closing above our level of support. Now, to be fair, as you can see from my trade entries, my first entry was at 27.36. So it was a bit premature. I pulled the trigger a little bit early on this first trade as this candle was fluctuating in between this level of support. I entered for my first buy at 27.36, but once we got the closure above our support, that's where I took my second entry here at 27.40. And as this trade progressed, price hit our take profit target for both trades at 27.57 for 200 pips from our first entry, generating over 11,000 in profit. Why did I target 27.57 as my take profit level? Just looking at prior structure, we can see a pivot point that served as support here, and then eventually resistance. So if we were to stretch that out, this lines up perfectly as a potential zone of resistance. As a trader, you don't know how far price is going to go, which is why we use prior levels of structure for our take profit targets. By the way, this is also a trade setup we had called out for our students, members within our VIP. From the screenshot, we had called out the entry, provided with a stop loss and different take profit targets. I love to show these examples because, for one, it just adds a little bit more transparency. These are obviously not cherry-picked areas of the market to explain how a certain strategy works. I mean, that's why I like to share my live trading footage and entries, but it also shows you that not only are these setups that I take, but these are also setups and trades that I also like to share within our community so they can benefit from these trades as well. So let's rewind a little bit and break it down step by step so that we can see how simple this really is. Step 1, we identified the trend to understand what types of trades we were looking for. Since we're in an uptrend, we're only looking for buys. Now that we know we're looking for buys, we looked for a level of support for our point of interest. Step 3, we identified a divergence between the market and the RSI, indicating bullish momentum, which was complemented by our ascendant trend line and support zone. Now, keep in mind when using the RSI, divergences are not going to appear in every area of the market. So in the case where you don't have a divergence and the RSI is not applicable, another tool you can use as a bonus level of confluence is the Fibonacci retracement. So if we were to start the Fibonacci retracement tool from the start of this pivot point to this peak, we stretch this out, we can see how the 50% level of the Fibonacci converges perfectly, not only with our ascendant trend line, but our support zone as well. Further confirming, most likely we're going to see bullish momentum from this point. So once you have these confluences, drop down to the smaller time frame, wait for a price action confirmation, where in this case we had a bullish engulfing candle closing above our level of support. Congratulations, you have your perfect setup. Take action and take the trade. So there you have it, folks. That is the criteria I look for on a regular basis for identifying the perfect setup. Keeping it simple by looking at trends, support and resistance, and using an indicator as an added confluence to support my general bias. Now, just remember that whenever a perfect setup is presented, that does not guarantee that you're going to win that trade. So don't go in hard and over leveraging your accounts. Always stick to proper risk management, because at the end of the day, markets are always going to do whatever they want, regardless of whatever strategy or criteria you're following. But as you can see from today's example, by keeping it simple and help you see things clearly for identifying your confluences, which will then increase your probabilities and help you make money in these markets. Don't rush the markets, look for your setups and wait for the markets to come to you. And when everything is presented, take action, take the trade.
All right, traders, that concludes our video for today. Hope you gained some value. Again, if you have any questions, reach out anytime. Don't forget to check out our trading resources down below in the video description. If you want to watch any of our recent uploads, you can check out these recommendations. Thanks for watching. We'll see you on the next one.